Hey guys, Akil here. Welcome back to another weekly trading video. I apologize in advance. My voice is almost gone. I spent the last 3 days cheering at our track and field championship meet, but I wanted to come in and give you a weekly video, not only because I know you guys enjoy it, but also because I wanted to follow up on a discussion that we had before I left for the weekend, and that was on the non-farm payrolls. I just recorded a version of this, which was really long and nerdy, so I'm going to make this quick and brief so it doesn't confuse or bore people. Before I left on Wednesday, we talked about the biggest factor to kind of judging movement in the market when it comes to news isn't necessarily the news event. It's the deviation from the expectation. And all of the reading that we did leading up until Friday, we were reading positive report, positive report, positive report. You can see there was a massive forecast here on the non-farms. And we talked about what kind of movement we can expect in the market because of this. And we said that if we do get a good number, I don't think it's going to move the market that much. Why? Because the market expects it. It's already been priced in. We saw kind of a bullish dollar movement going into the week because of that. Therefore, the biggest move in the market would occur if we saw a deviation from the expectation, meaning that everyone's leaning one way, then all of a sudden, boom, we get hit with this surprise news. That's where you're going to see some of the panic and the reactions in the market occur. And that's exactly what we saw this Friday. Now, again, I didn't expect the number this poor, but you can see big forecast, big miss, even a big revision from the previous number. Caught the market by surprise. We saw massive moves, and that's one of the reasons we saw so much dollar weakness in the market going into Friday. And this continues kind of a news conversation we've been having. We had a big hit on Canada a few weeks ago about really working with our more advanced traders on that hybrid style of trading, where we are not news traders by any means. We are technical traders here at Tier 1 Trading, but if you can start to understand news and kind of make predictions on what could happen if this were to occur, then you can combine the two and you can catch some pretty good moves in the market. Again, not saying you go out there and recklessly gamble, technicals first, but it's another thing that you can use to increase your edge in the market. Now, speaking of the markets, let's head into a few pairs that are on my radar for this week. We're going to start with the dollar Canada. So dollar Canada, we're going to start here on the daily. We're going to make this short and sweet. This is a VS1 to a VS1 trade, so structure to structure trade. For you guys that are new to the channel, these boxes on your screen are called our VS1 levels. They are visual areas of support and resistance, right? So, structure, as we call them. And if we look left here on the daily, you can see that lower purple zone is our next level of major structure on the daily chart. Now, structure is the backbone of my trading philosophy. I believe it works like a magnet. Price is pulled towards structure, then it either breaks and is pulled towards the next level of structure, or it bounces off of it. And that's what I would be looking for here. This is going to be called a decision point. As price action comes down to this lower level of structure, we want to start using that if-then syntax. If we violate it, then boom, we could look for a move to the next level of structure, which will open up its own trading opportunity. If we hold, then I would expect a move from this level of structure, again, if we hold, and a retrace to our previous level of structure right here. So you're looking from a move anywhere from, what is this, 121 evens, let's call it, right in the middle, 121 evens back up to about 122.50s. And this will be a very decent opportunity whether you are a intraday trader or a day trader as well. It's a pretty good range there. So dollar Canada is a pair that I'm interested in. And again, even if we violate that level of structure, then there's room from 120.60s all the way down to about 120 even, really the lows here about 119.17. So it doesn't really matter what the market does. All I need to do is rehearse that if-then syntax in my head. If this, then that. If this, then that. And then react to whatever the market shows me. Next up is going to be New Zealand dollar. Aussie dollar is actually very similar to this setup as well. I thought New Zealand was a little bit better because it has a head and shoulders pattern. So pick this one instead. But both are very similar. So go ahead and look at the Aussie too. But New Zealand dollar has a head and shoulders bottom, right? Price action has come down. We've retraced, creating our left shoulder. We've put in a nice extension down here, giving us our head. You can see the visual level of structure that was created. We pushed back up to what's called the neckline, right? So a horizontal or close to horizontal level of structure resistance right here. And then we got rejected there, pushed back down, right? If you look left, structure leave clues to the same level as our previous left shoulder. This gives us a right shoulder. This pattern formation right here is called a head and shoulders pattern. It is a classic reversal pattern in the market. What we're looking for here is we're looking for a violation of this neckline. I'm going to put this neckline a little bit higher because we have this sneaky level of structure over here, but a violation of this neckline. If we can violate this neckline, the expectation is that we're going to continue higher to test our next level of structure. We have a nice 74 even handle right in there. So this is going to offer opportunity basically from about 73 evens to about 74 evens, about 100 pips of potential profit to the upside. So next, we're going to look at the CAD yen. This has been a favorite of ours on the platform. It's not one that's in my personal portfolio, but this has offered a lot of good opportunities this year. And we have another one on our radar. Now, again, going back to those VS1 levels, those blue and purple boxes on your screen, you can see that the most recent move we had here was a violation of a level of structure. So just like with the dollar Canada earlier, right? If we violate one of those levels of structure, then we can look for a push to the next level. And you can see there's two overlapping boxes ahead around that 91 even handle that we could potentially push to. If we just zoom our charts out a little bit, hopefully I have enough data loaded up. Yep, you can see these double tops over here. And that's the next level of structure that I would expect price to be pulled towards. So the question is, how can we take advantage of it? Well, we can look for one of two things. We can look for a breakout or a pullback. I'm going to go to a trading view chart here because I'm going to use an indicator that I don't feel like loading up on my NinjaTrader chart. But you can see trading view a few things. One, we do have an inside bar here on the daily chart, which means we are starting to consolidate a little bit. The range is starting to contract, and we would then expect a breakout after that. We talked about range bars last week. And if you did watch last week's video, which you guys should be watching each and every week, right? Because they kind of follow up on each other in a weird type of way as far as concepts go. We're going to have one of the Roberto specials setting up. So I'll talk to you about my kind of view of it, and then we'll talk about Roberto's way as an actual way to get involved. But again, once we see that breaking close above structure, which was right here, one of the ways we can get involved is looking for a pullback. So price action to retrace back to the previous level of structure that was broken, and for that previous level of structure to kind of push price action in the opposite direction. And as we go down to a 4-hour chart, you'll see this, right? Here is the previous level of structure that was created. Boop, little retracement. We held here for a little bit, right? And then boom, broke out. And you can see this previous level of resistance, right? Boom, hit it, boom, hit it, boom, hit it. Once broken, we now expect to act as support and for the market to extend off of that. And that's that classic pullback trade that we talk about. Now, when you have this pullback trade, that's you know, if we had to kind of think about this in a strategy format, right? The pullback trade would be the type of trade you're looking for, right? Now you need an entry. So what is your reason for entry? And that could be many things, right? One that we've been playing around with in the live room comes from a trader that uses this. And it's an inside bar breakout strategy using the stochastics RSI, which is that indicator at the very bottom of your screen. So what he's looking for is an inside bar, which is this bar right here at the purple triangle. Again, it completes within the range of the previous bar. This is called the mother bar. He's looking for this inside bar at a very specific level. So not just every inside bar. It's very important to understand, right? Because if you look at the chart, there's going to be inside bars all over the place. If you just try to trade every inside bar, you're going to go broke very, very quickly. So we call this a bias inside bar, where the inside bar comes with our directional bias. But he's looking for that inside bar. He's then going down to his indicator, right? So if I see inside bar at the level that he cares about, then he goes down to his indicator, which is the stochastics RSI. He needs that indicator to be in the oversold, in this particular case, in the oversold position. If he has inside bar at level that he's looking at, then he looks at the stochastics RSI. If stochastics RSI is in an oversold position, then he buys next bar market, right? So this would be his buy right here as soon as this inside bar closes, and that would give him his trade opportunity to move higher, right? So we talked about going to 91 evens. If we just take that aggressive concept, right, you're looking at a entry. If I can get this right, here we go. Entry There we go. Entry right there. Stops below the lows. We won't measure those out, but we'll just put them down there. And then think a move to, I think we said 91s, right? That previous level of structure. You can see a pretty decent pullback trade with a 3-to-1 risk reward, so that's not that bad. And again, you don't have to use this method. I would advise that you use the method that is suited best for you, but this is just giving a good example of how you look for the trade concept, and then you have your entry reason that actually tells you how and when to get into the trade. And I think that's something that many traders are missing. Many traders are looking for the concept, saying, oh, I'm gonna look for a pullback. And then when the pullback happens, they don't have a reason to get involved. So they go off some type of emotional reason, like, hey, this looks good right here, or, ooh, the market's moving without me. Let's get involved now. And that's a recipe for disaster. Remember, consistent analysis plus consistent execution equals consistent results, not consistent analysis plus random execution. That will give you random results, and random results will leave you in that boomer buster category that Mark Douglas talks about, where you're not bad enough to quit and find something better to do for your life, but you're not good enough to make anything out of trading. So you're kind of stuck in the middle, and you're just essentially wasting time, which I think is the worst category. I'd rather just fail and discover that there's something else I have a passion for, or something else I can make money with, than kind of just be mediocre. But that's just me. Anyway, I hope you guys enjoyed the video. Hit that like button, subscribe if you're new, make sure that notification bell is hit. That way you don't miss the next video. Also, check out our platform, www.tier1trading.com. All types of awesome stuff. We may have a webinar coming soon as well, so stay in the loop and you'll hear all about that. I'll see you next week, hopefully with some video camera once again and a much better voice. All right, until then, plan your trade, trade your plan. Take care.
Here's the 3 keys we're going to cover today. First one is the master key, and that's how to create a backtested profitable trade plan without wasting years of your life. Now, they're going to look at 2 other keys to go along with this, and they're going to be called sub-keys. Why is that? Well, they're actually part of the primary master key, which is the backtested profitable trade plan. These other 2 keys are things that you will do inside of the plan, but they're so important, I wanted to break them out and show them individually to you as well. Second one, the first sub-key anyway, is how to make more profits by being wrong more than you're right. That's right, actually be wrong more than you're right and still actually make more profits. Pretty amazing. And then the second key, or this third key and the second sub key, is how to almost double, if not double, your profits without changing your trading strategy. Okay, this is pretty amazing. You actually do the same thing, and I'm going to show you how you can actually double, if not double, your profits without changing a single thing about your trading strategy. All right, so now it is time to take out your pen and your notepad, and we'll get started with key number 1.